Greetings. Hey, it's Doug at Community Lending Group. Now, for last week's mortgage moment, we discussed buying a second home and the many financial benefits that can provide you. But what do you do if you want to buy an investment property, but your income is not sufficient? Or maybe you just started your own business. Are you out of luck? No. There is a great product that's very popular among investors. It's called a DSCR loan, which stands for Debt Service Coverage Ratio. Now, this is a non-conforming loan in which the lender uses the income from the home being financed as the income for the new loan. They then compare it to the home's mortgage expense, including the principal and interest, the property tax, homeowner's insurance, and any HOA fee. They then take the rental income, divide it by the expenses, and the result is what's called the debt service coverage ratio, or DSCR. We then use this ratio for qualification purposes. Now, if the ratio is 1.0, it means that the property is breaking even each month. If the ratio is higher than 1.0, it means the property is turning a profit each month. And if it's lower than 1.0, it means it's losing money monthly. Lenders are looking for a ratio of 1.0 or higher. The larger the number, the safer the investment in the eye of the lender, which means that they're going to be more generous with their lending terms or lending requirements. Now, there's numerous advantages to this loan. The number one advantage is there's no personal income required. In fact, employment information is not even listed on the application. The next advantage is that first-time investors are okay. You don't have to have any experience in renting. Next, these loans can be up to $2 million and even higher with some of my lenders, whereas a normal conventional loan is capped at $725,000 based on 2023 guidelines. Plus, there's no mortgage insurance. Next, you can finance more properties. Now, with normal conventional guidelines, you're capped at having 10 financed properties, but not with a DSCR loan. Finally, although most loans are a 30-year fixed loan, there are options for an interest-only payment, which can help with qualification when your ratios are tight. Now, these are just a few of the many benefits. Now, there are a few guidelines you need to be aware of. First off, you must own your own home. You cannot be a renter and have this loan. Next, be aware that the DSCR loan has interest rates that are typically 1 to 2 points higher than the standard conventional loan. Next, reserves are required. Now, 1 month of reserves means that you have 1 month set aside of your mortgage payment, including principal, interest, taxes, and insurance. Now, with this type of loan, you're typically required to have between 3 to 6 months of reserves. But be aware that this money does not need to be liquid. It can be a retirement fund, 401k, stocks, or a similar product. And finally, there are often prepayment penalties of between 1 to 3 years on this type of loan. A DSCR loan is a powerful tool for providing financial opportunities for income-generating properties. So if you'd like to know more about how this program might work for you, feel free to give me a call. And if you like the video, make sure and like it and subscribe to my channel. It really does help. This is Doug with Community Lending, and I look forward to talking to you real soon.